Hi guys, welcome to Traders Talk, and this is Meng Hon, your host for Traders Talk. Yeah, and of course, this week we'll be only covering for some market updates. Yeah, I'm traveling again, and hope you guys had a good week last week because it was quite great. Yeah, so what happened last week was, of course, the uh, the CPI was actually released on Tuesday, and of course, what happened was that the decrease in the what is that decrease in the rates, right, was not as expected. Inflation decrease in inflation was not as what was expected by the market. Yeah, so of course. When that came out, the market actually had a huge sell off. Yeah, and let's look at the charts last week. Yeah, so let me just see it again here. Okay, yeah. So this is actually what happened last week. We were actually right here when we actually at the show, right. The earlier day last week was actually green, right. We were actually still trying to continue the bullish run up here. Yeah, and this is where we had our show before the CPI release last week. And of course, once the CPI release, I think it was 8:30 last Tuesday, right? The S&P and also Nasdaq has actually had a huge sell off, and of course, throughout the week, things did not. Was also not so good then. Yeah, then of course on Friday itself, we had some form of pullback towards the day, and of course the day actually ended with a bullish pin bar, and I don't know if that was what attracted the market to come back in yesterday. That we had also a rally. After some hours of opening, right, we actually went higher. Initially, the market actually opened gap down yesterday. You can actually see here. Let's put the 1 hour chart, right. You can actually see here that the market actually opened gapping down, yeah, gapping down, and of course after the 1, 2, 3, after the third hour, the market actually went continued to go higher. Yeah, this was what actually happened yesterday. So yep. So again, of course, the market is very difficult to predict, and of course, we only try to actually look at our trades or manage it depending on the price action. So far, of course, the price action yesterday was actually quite bullish. You can actually see this huge bullish pin bar here. This pin bar here, but of course, because this Tuesday is actually the not Tuesday, 21st, which is actually the Wednesday trading day, right? The Wednesday trading day. What we're going to have is here. Let's check. What we're going to have on Tuesday. No, this is last week. Okay, so this week, basically on Wednesday, Tuesday, Wednesday. Yeah. So on Wednesday, which is actually 21st September, right? 21st September trading day. 21st September trading day. We have the FOMC Fed funds rate hike announcement, yeah, which would actually come in at about 2 a.m. Singapore Malaysian time, yeah. So 2 a.m., which is Wednesday trading day, this would actually come in. Of course, what's going to happen is that the Fed is continuing to actually increase the rate, and of course, looking at what happened for the CPI release was not so drastic reduction of the inflation rate. So of course, the Fed would continue to actually increase rate. In fact, the Fed chairman Jerome Powell has already said that they would do whatever it takes to actually run inflation down to 2%. Run inflation down to 2%. Of course, now the inflation is actually slightly above 8%, and there is actually a lot much more to do to curb this down to 2%. Of course, I mean personally, if you ask me, whether increasing the rate would actually run down inflation or not, I think for general day-to-day kind of things, it's actually quite difficult. And if the inflation is actually based on a basket of items, then of course those items may are actually necessities, and of course based on the current economic environment worldwide, right? I mean, I do not expect things to become actually cheaper. Yeah, all prices are not going to run down back to what 80 US dollar or 80 US dollar. And of course, the other things like the things we should consume every day because of supply chain problems, because China is still in lockdown and all these kind of things. So things are continuing to be high. So I mean, as much as they can hike the rates, the bigger things that may be affected might be things like cars, housing, loans for, I mean, home, what is that? The properties and all these kind of things, which will take a bigger hit for the general people. Yeah. So of course, yeah, 75 basis point hike or even 100 basis point hike, that will actually how to say, drive in a certain way the market, although things are already priced in. And this pricing in of the rate hikes are always based on so-called market expectation. Yeah, just like the CPI market expects that the inflation to actually run down to 5%, and when that didn't happen, the market had a sell down. Yeah, so of course right now, the market consensus is probably still around 75%, 75 basis point. And of course, if the Fed raise it to 100 basis points, then of course the market will again adjust for the market pricing, and then that would actually pull the market back down. Yeah. So this is where we are right now. We are actually at 3899. Yeah, 3899. Again, that was the levels which we actually spoke about, that the 3900 level, 3900 level, somewhere I think around here. Yeah, somewhere around here is the level which provided strong support back then. Yeah, this was one. This was also one till last Thursday before it actually came down, and now we are again at the borderline of this 3009. Yeah, so of course, what can happen is if the expectation are not met by the market on Wednesday this week, then of course what can happen is this would actually make turn to a strong resistance, and the market can have another pullback down to this 3,700 level down here, 3,700. Yeah, and of course, if it is 75 basis points as what the market expected, then we may also see that the reversal of this downtrend may hold, just like what happened, I think, back in July, right? I think back in July, there was one rate hike, right? Rate hike. Yeah, of course, that was 75 basis point, and after the announcement, before the announcement, market pulled back, and after the announcement, basically the market had continued to rally up. Yeah. So again, if you are in any positions, unless you are on a long-term long positions, you may want to actually do some coverings there. If not, you can also leave it open. Yeah, of course, if you are in short term trades, and if those trades are already in profits, again, I always say that once you are in profit, take profit. Don't let all these kind of binary events, right, take away your profits. Yeah, and of course, if because of the uncertainty in the market, and if you're not trading, going on directional trade, which is either up or down, which we also don't know, right? Then of course, it's good to reduce the size of your trades, or even better close it to actually reduce the so-called open risks, which are actually quite uncertain during this week. Yeah. So that's Wednesday. Of course, if you want to trade until Wednesday, I would say that's still possible. Yeah, because of the strong rally up, I'm perhaps this pre Wednesday, the risk off again comes on, then market can have a slight pullback before it sees what the Fed announces. Yeah, so there's S&P, and Nasdaq, of course, is also a similar story, right? We had pullback last Friday, and of course yesterday's rally also came back. I think, yeah, 2-3 hours after market. Then Nasdaq also rallied back up. Yeah, in fact, this morning, the futures. The futures also opened up this morning, if not mistaken. Let me just check. Yeah, futures also opened up this morning. Yeah, so Nasdaq, of course, would be more prone to the interest rate hikes. Interest rate hike. This sector would be actually quite prone to be affected by any so-called non-consensus rate hikes announced by the Fed. Yeah, and of course the target for the Fed is to actually go above 4% interest, up to 4% interest by year end. So even if they actually raise the rates this round of what is that? About 75 basis point, right? We will only reach about 3%, 3%, and there is probably going to be another two hikes before year end to actually make it up to 4% targeted interest rate by year end. Yeah. So let me see. Yeah, so that's it. Of course, the S&P yesterday itself, you can actually see that a lot of the counters have regained some of the losses which was made last week. Yeah, so Friday and Monday they have actually regained some of the losses, and let's see if this rally can actually continue for the next week, or have another pullback on or before after the Fed rate hike announcement. Yeah. So besides that, I do not see any other things coming through this week. Wednesday FOMC meeting at 2 a.m. and then nothing much. Friday, manufacturing index. Yeah, that's not so key. Yeah, so that's it. I mean, this week there's only one key announcement by the Fed. Yeah, and of course, I mean, we have also pinned down what we actually expect in our newsletter. If you have actually not read our newsletter, just go and check your emails. If you have already subscribed, of course, if you have not subscribed, you can actually just go through the site. Go through the site. Let me just pin the thing here. Let me see. Okay, so yeah, this is the the site where you can actually get the newsletter. Yeah, also some other things which we have actually also posted on TikTok. Go and subscribe our TikTok channel. Yeah, because that is where we post a lot of new contents, and also the contents where it is actually more timely contents. We are actually posting it there. Yeah. So okay, so that's up. We're going to wrap this traders talk this week, and of course, have a safe trading week. And I will actually catch you guys next week. I hope to actually bring you more contents during the next traders talk. Yeah. So until then, trade safe and have a good week. Yeah. Bye bye.